This is the Finance Committee meeting. Call the meeting to order and stand for the pledge, please. Ready, begin? I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you. Item 1, agenda, we're switching item 7 to, and we're switching item 7 up to number 4. So with that change, do we have an approval of the agenda?
I motion to approve the agenda.
Second, agenda approved. Number 2, is there any public comment? Is there anybody online?
We do have one person online. Do you have a public comment? Can you hear us?
I think you have
a
chat.
Can you
hear us now?
Yes, I can. Thank you.
Did you
have a public comment?
No.
Okay,
Thank you.
All right, so there's no public comment. Item 2. Item 3, approval of minutes of the July 19th meeting. Did you have any changes to the minutes, anybody?
Nope.
I motion to approve.
Seconded. The approval of the minutes is accepted. So then that brings us to item 7, which we've moved up to the number 4 spot. The review of preliminary audit. Fiddick and Brown, LLP, representative.
Christopher Brown is representing the firm, and he'll be conducting the presentation.
Thank you. All yours.
Right. Thank you very much. Once again, my name is Chris Brown. I'm the engagement partner, and we'd like to go over the results of the June 30th, 22 audit. Kind of big picture here. The document itself hasn't changed materially. There is a new accounting pronouncement. I'll go over that briefly when we get to that. Well, but I would like to turn your attention to
one comment. If you're looking at the packet, the person online, it's a big number 52 is a large number 52 sheet is the beginning of the financial report.
And I'll go ahead and work off of those numbers themselves.
Okay.
So, one moment. I'm going to take you to page 76 in your packet. And what you have here is the auditor's report. This is the report that we include in the financial statement that states our opinion on it. The second paragraph you can see, and I'll go ahead and read this for you. In our opinion, the financial statements referred to above present fairly in all material respects the respective financial position of the governmental activities, the business type activities, in each major fund of the district as of June 30th, 2022. So we're providing you what is called an unmodified or a clean opinion. The rest of the contents within the auditor's report itself is basically spelling out what our duties are and what the district's duties are with regard to those financial statements. I won't go into those right now unless you have a specific question about those. So we're starting off good here. I'm going to go ahead and take you to page. Sorry, so it's going to take me a little time to catch up with the different numbering here. Let's go ahead and go to page 77. That's the next page. Again, this is the auditor's report, and down at the very bottom, there's what's called an emphasis of matter. And that is basically opportunity to call to your attention anything that we feel needs such. And here we're basically talking about the effect of a new accounting pronouncement It's Government Accounting Standards Board's number 87, and it has to do with leases. Little background in the past, leases that were considered to be operating, where you basically just paid like rent, were treated as an expense. What's required now is there's some analysis that needs to be performed, and if the lease itself, whether you're the lessor or the lessee, qualifies under those rules, you need to capitalize it. And that is the case with regard to, I believe it is, cell tower? No, it's property that you have. So you're the lessor, so basically it's a new item on your financial statements, and there's a lease receivable on your financials itself. This right here is basically just calling it to the reader's attention that there's something new. So nothing unusual, it's just calling it out.
It's for the circle.
Circle ring.
So I'm going to go ahead and take you to page 80. And what we see here on page 80 is the condensed statements of net position. The statements of net position is essentially your assets, your liabilities, and your deferred inflows and outflows and net position. It is an aggregated table. It's very condensed, and it's good for comparison for our purposes here. And as you can see, as you're looking at this table that's broken up by governmental activities, it's going to be like your general fund and such, and business type activities, water sales, essentially. There are other activities within those, but those are the big items. And of course, the total district. And it's broken up by assets, liabilities. There again, the deferred inflows and outflows and net position. And we can see that total net position, and I'm looking at the column that's second from the far right. It says total district 2022. You can see that net position was $53,520,611. What makes that up is your investment in capital assets, amounts that you've invested in capital improvements, infrastructure and such, and an unrestricted amount as well. And you can see that there is positive movement in your unrestricted balance account. That's kind of something I pay attention to when I'm doing an analysis. We do see a higher balance from the prior year. Okay.
Is that increased amounts of that's taken into the district?
Yes, and I'll go over that in just a moment.
Okay. And then the other one, the capital assets, the 30,000 to 30. That's appreciation, not appreciation, is it? Is that appreciation?
It's depreciation and amortization. So it's basically going to be the amounts that you've invested over time, less any annual depreciation taken against it.
Right.
It's called accumulated depreciation.
Right.
And I'm going to take you to the next page, and this is going to be page 81. And I'll do a little reading verbatim here at the bottom, but I want to point out just a couple of things when we're looking at this table here. We can see that interest earnings. I just wanted to bring this to your attention because it kind of popped out at me. Interest earnings is in the general revenues category. That's what's called a net number, and it's kind of a combination of some interest revenue and interest expense. It's kind of combined together. So it's perfectly normal to see this presentation where in 2022 we don't see a balance, but we see a balance in the prior year. So that's not a mistake. That is on purpose as well. Kind of the other side of it is going to be in the expense area. If you look at the expense at the center of the document, you see interest expense, investments net. That's kind of the other side of it right there. Nothing unusual. I just wanted to bring it to your attention as far as the reporting. There's no, nothing unusual there. What we did see is, of course, a decrease in investment returns and on fair market value of investments, and that's essentially what's driving that number right there. All our districts are experiencing the same, very same, so it's nothing unusual. Okay, so to kind of get to your comment, I'm going to read the bottom paragraph here. You can see total revenues increased by 640,000. I'm going to round these numbers. Okay.
Yeah.
Total revenues increased by 640,000 to 11,493,000. Program revenues. Let me just kind of explain that. Program revenues are essentially what you do for a living. It's going to be activities. It's going to be sales of water. It's going to be rental space, community center. It's going to be other items and such. General revenues, when I get to that, are going to be things like property taxes and interest earnings, things that are part of your revenue stream that aren't part of your normal activities. Then again, program revenues increased by 385,000, due primarily to increases of 347,000 in monthly meter service charge, 251,000 in water consumption sales, which was offset by a decrease of approximately 279,000 in other charges for services. That was program revenues. Getting to the general revenues. General revenues increased by 254,000, due primarily to an increase of 197,000 in other income, 111,000 in property tax, which is to be expected as properties have increased in value over time. It's a function of reassessment upon sale, which were offset by a decrease of 53,000 in interest earnings due to year-end fair value adjustments. And that kind of ties into my previous comment that fair value adjustments of investments or amounts held went into that number. It's a paper. It's not an actual loss or anything like it. It's a paper number, basically just looking at fair market value at a particular time. So big pictures. We saw, we saw program revenues increase, and then we saw the increase in general revenues as well. I am going to take you to page 82 now, and at the very top, similar discussion about the expense side of things. And it says at the very top paragraph, total expenses decreased by 1,024,000 to 8,397,000, due primarily to decreases of 609,000 in general and administrative costs, 150,000 in pumping, utilities, net solar credits, 264,000 in interest expense related to long-term debt, and 132,000 in interest expense related to investments. And it says it was offset by an increase of 189,000 in transmission and distribution. So I'm going to peek back at the prior page. So this is going to be page 81. Kind of a synopsis of what we've got right here. We can see in the right-hand columns where it says total district 2022, we can see total revenues of the 11,493,000. Total expenses, kind of towards the bottom two-thirds of that table, of 8,397,000. Change in net position, that is like the fourth line up, or third line up, I should say. Change in net position, the other way of looking at it is like your net income. And we're showing that to be 3,096,412. All being said, revenues less your expenses equaled, and I'm repeating this number from the beginning of our talk here, the 53,520,611. So I just kind of dragged you through a whole bunch of numbers there, but we saw positive results in our revenues as well. So as compared to the prior year, an improvement in your net position of approximately $3 million.
Higher revenues and reduced expenses.
Yes. Moving forward in the report, let me see here. I really didn't have anything that I really wanted to bring to your attention with regard to the other tables, such as your capital asset tables or your debt tables. They're falling in line with historical, with the past. Nothing really unusual there. As you move forward in the report, you're going to move from what we were just looking at. What we were looking at is called the management's discussion and analysis, kind of a condensed version of the basic financial statements. But as we move forward in the document, I'll give page 86 as an example. Page 86 is the full statement of net position. This is with all the detail that was condensed in those prior tables that I was talking about. As we move to page 87.
So in these tables, we would be able to find where the reduced, would we be able to find where the reduced expenses came from?
That would be part of it. It tells part of the story, yes. Yes. Page 87 is going to be the revenue and expense side of the equation as well, and that has it broken out by revenues and expenses by governmental and business type activities as well. It's basically mirroring what we just went through. As you move through the document, what we do is you're required to report on the full accrual basis of accounting, which is what we just went over. Basically, what that does is recognizes revenues when they're earned, expenses when they're incurred. Later in the document, it moves to the fund basis of accounting, and it's based more on I shouldn't say cash basis, but it's short-term, actual on-hand type of reporting. It's called modified accrual accounting, and you will see that. Wasn't really planning to go through that because it kind of confuses the conversation, unless you have questions about it. But it's on page 88 through 89. Okay. And then we get to page 90. And this is a section, what starts on page 90, a section that is for your business type activities. You're required to report these tables that follow for Water Enterprise Fund. And what you have here on page 90, 91, 92, and 93 relate to the water enterprise. And what you have here on page 90 is the statement of net position. There again, it goes through just on the water enterprise itself, your assets and liabilities, net position. And looking at the document, we can see net position for the water enterprise standing alone was $41,174,834. There again, similar to what we previously discussed, that position is broken up between investment or capital assets and unrestricted as well. Nothing really unusual to report there. Moving to page 91 is the statement of revenues and expenses and changes in net position. Is your revenues and expenses. At the very top of page 91, we can see operating revenues broken out, and you can see total operating revenues and there again I'm going to round, is 8.799 million. Operating expenses, kind of towards the center of the document, 5.563 million. Your depreciation expense, kind of going back to the previous comment with regard to net position, this is the actual annual depreciation expense that is being recognized for 2022. It was 1,796,000. Then the document takes us down into the non-operating revenues and expenses. It's kind of aggregated together here, and we can see the net of those non-operating revenues and expenses of 202,538. Next line down is net income before any transfers from other funds, and we can see that is 1,642,146. We also have a transfer from the other fund. So this is coming in from the governmental operating fund. Change in net position. And it's kind of like net income in a way. This time it's adding in net income before the transfers plus the transfer of $2,079,010. Bottom line again, net position at the end of the year. Kind of want to look at net position as the net worth, you might say, of 41,174,834. Nothing unusual to, at least per my review, to bring to your attention on that. It's just, normal operations there. As we move into page 92, is the statement of cash flows for the enterprise fund or the water fund. Basically what it is, it's two pages using two different methodologies. One is called what's called the direct method, and the other one is called the indirect method for calculating this amount. We'll take a look at the page 92 that is using the direct method. So essentially what it is doing is it's looking at actual cash used and received. These amounts are adjusted for accruals, or amounts that you're expected to get but you don't actually have yet. This statement here shows actual cash that has been received and is part of your balance here. It shows amounts that are received or used from operating activities, and you can see that cash flow from operating activities was approximately, for the water fund, I should say, to be clear on that, was $1,078,000. With regard to non-capital financing activities, things like property taxes and such, amounts earned from that. Amounts provided from those type of activities was $464,000. Cash flow from capital and related financing, so it's basically the usage of cash for building your projects and such, and servicing the debt taken out previously for your projects. So you actually use cash in this situation of approximately $2,217,000, as to be expected. Interest earnings shows a negative 156,253, and we can see net decrease in cash and cash equivalents of 830,000, bringing your total cash at the end of the year, and this ties to the previous statements that we have looked at. Total cash at the end of the period was $12,515,435. As we move forward into the document itself, starting on page 94, pardon me one moment. Starting on page 94, it's 32 in the actual document, but 94 in this agenda package here is the beginning of the notes of the financial statements. And essentially the notes of the financial statements, number one, they basically explain what the entity is. You can see here the first item in the notes is explaining what the district is in the history. Various sections within the notes strive to explain the numbers within the financial statements themselves. The notes don't stand alone. They're basically support for the numbers that are in the financial statements. So there's going to be a note on the cash, how it's broken out, what type, and such. Investments. What are those investments? Receivables. Capital assets. So all the tables and the verbiage, the narrative within it supports the numbers that we've just gone through. I won't go through those one by one. But I will take you to, pardon me a moment, let me find the page here within the package. It's going to be page 104. Okay, I had mentioned that GASB 87 was implemented in the current year, and there again, it requires reporting leases on the district's records. And this is a new note, and this basic structure will be in your future financial statements. It might be refined a little bit as we go forward with regard to the structure of the note itself. But basically, what this is showing are amounts that are leases receivable related to the leasing of that property, those agreements that you have. Kind of the big picture, what is happening is you have your lease agreement, and you have lease payments due you in this situation. These amounts have been aggregated and they have been discounted using a borrowing rate. Okay, so I'm just going to make some stuff up here. Okay, so let's just say you have a total amount of your leases, cash that you would receive over the life of that lease, and it's discounted back to now using your incremental borrowing rate. I'm just going to make this up. Let's just say it's 3%. Okay. So basically, it's discounted back. You put the lease on the books, and the amounts that you have not received but you expect to receive are put into deferred inflows. And you can see there's this little side column there. These are amounts that will be applied to lease revenue and interest income in the future years. And it's a conversation when we have more time, but that's essentially what we have here. Is you're putting the lease on the books, you're recognizing that you have this receivable, you're not recognizing all the income right now, you're going to be recognizing it over the life of that lease agreement, and that amount is going to be made up of revenue and an interest amount that you're going to report every year. The other side of it, the lessors, or the lessees, I should say, are going to do just the opposite. So whoever you're leasing this to is going to have to put this on their books, but from the other side of things. So all government entities have to do it. So if you're reviewing any other entities' financial statements, you would expect to find this if they have capital leases.
So what's the point of having to list future revenues?
Kind of the idea is that you want the reader to understand all agreements that are outstanding or in effect when they're reading your financial statements. The old way is essentially, let me go the other side. No, I won't do that. That's confusing. I'm going to use our situation here. Your situation as a reader would see without this pronouncement is you took in X amount in rental revenue. There would be no receivable. The reader wouldn't really know that you have a commitment from a third party, another party, to make payments to you in the future. It's not part of your financial statements in the past. What this has done is this allows the reader to see, oh, you have leased assets of the entity, and you're expecting payments over time. So it gives the reader an idea of creditworthiness being one of them.
That's what it would be, right?
That's part of it. That's a part of it. But it gives the reader, especially if you're dealing with a very large government, let's just say County of Los Angeles, they're going to have huge amounts that are going to be reported as leases receivable and leases payable. And by having that in there, I'm using that because it's big and we can all just imagine what that is. It gives the reader a better idea of what cash flows are coming in, going out, and what the timing on those are going to be. And that also plays into creditworthiness as well.
Yeah.
So, yeah. Kind of a side note, this is GASB, Government Accounting Standards Board, is in a way is always trying to catch up with FASB, which is Financial Accounting Standards Board. That's public companies, non-governmental entities. This has been implemented for non-governmental entities for a while now. Governmental entities are implementing it now.
Well, it makes sense that if you've got, $10 million a year coming in leases, now they're not absolutely guaranteed, but neither are water revenues. People can stop using water at any time, so, but they're theoretically on the books for
Correct.
future years.
And it allows the reader to understand the activity of the entity that much better. I'll kind of go back to the Los Angeles thing. Okay, well, let's say there's $1 billion in receivables on their book. That's big. It's big. So they're able to capture that. Conversely, they've got the lessor side of it, or lessee side of it. So having said that, that is really the big change. The rest of the document itself is consistent with the prior years. There again, it's being made up your cash notes, your receivable notes, capital assets, your new GASB 87 information, your pension information, and you have a pension asset, which is fantastic. So, and all the disclosures for that. As you move towards the very back of the document, there is supplementary information, and it starts on page 127. So page 127 through.
So the pension asset's pretty small, isn't it? It seems to me it was just $1,000, or it wasn't very much.
You want me to find it? Try to find it?
I just remembered it was a small amount. But the important thing that it is. Yeah.
Pension asset total of 539,181, which is fantastic compared to 99% of districts out there who have actual liability, and some quite large ones.
Oh, the asset is 500,000. That was.
Between the governmental and the business type.
What page is that on?
This is on page. Are you seeing it? It's in the second grouping under non-current assets at the bottom of that grouping. Net pension asset, governmental activities, 53,000 and change, business type activities, 485,000, total of 539,000 change.
Okay.
Now, what's it going to do next year? The market's going down right now, so
market's going down, and CalPERS is going to go up.
So we'll see. On page 127 is one of the required sections, and it's basically a comparison of what your budget amounts compared to actual amounts per fund. There are several tables, and one for each fund: general fund, parks and recreation, street lighting, solid waste. So you can take a look at those. They tie into the previous documents, put in this format so the reader can see original budget to actual. As we move forward, we have some other tables disclosing some information with regard to the pension, interest, rate used, funding levels and things like that, but your funding level is already 100% because you have an asset. At the very back is the statistical section. And essentially what it is, it's taking all your financial information in the tables that precede it, putting it into various formats to help show trends over time, things like net position over time or your net worth over time. That's just one of them. There are many of them. Let's see here. Fund balances of the different funds there again over an extended period of time, like a 10-year time period. This is just to give the reader a better sense of the activities of the organization over time. It is a required item for the Government Finance Officers Association Award. It's called an ACFR. And you won the award in the prior year. You'll be applying for it in the current year, and we fully expect that you will win the award again in 2022. So that's pretty much my presentation. I know it's Finance Committee, so dragging you through a lot of numbers. Here, I wouldn't expect to do this in the board meeting itself. I wanted to go through the numbers and point out GASB 87. There again, if you're on other committees and such with other entities, you'll see that, and you'll have kind of a primer in what you're looking for on that. But the audit went well. Jeff Palmer, the supervisor on engagement, he says thank you to everybody. Everybody. Great job. Timely in your responses. It went really well. Providing you with an unmodified opinion, have positive results for the year. Thank you very much.
Thank you. Seems like a good report.
It is a good report, yeah.
Anytime you have reduced expenses and increased revenues, it's a good thing. Thank you. Any other questions or comments?
No, I think so. The final, we do have some ministerial things that we'll just, that David had already emailed to you. They're just mostly some word verbiage that needs to be changed, so. We can go over it if you'd like, or we could just.
No, it's just ministerial. The Sheep Creek thing, that's.
That was the one thing we wanted to ask him about.
Well, I just saw comments in there, and I guess it's still relevant for this.
For the time period.
Yeah.
The Sheep Creek, potential Sheep Creek merger was still relevant as of 6:30. However, it's not relevant anymore.
Okay.
So what do you recommend on that?
Well, we don't want to mislead anybody, the reader. So
Unless you want to put an asterisk in here that it's not relevant.
The first thing I was going to say is at the very back. Let me see if I can find the page. There's like the last of the notes. Well, I won't go to that. It's basically the last page of the notes of the financial statements and its contingencies and things like that. We could put another note in there saying as of whatever date subsequent to year end, that agreement or whatever plans you had for that basically will not come to fruition. I just need to kind of get the nuts and bolts of that, or pull it out of where it's first mentioned in towards the beginning of the document. I don't remember exactly how it's embedded in the document, but those are probably the two options. Is either to kind of disclaim it at the end or go back to the beginning of the document and pull it out.
Well, the actual process would suggest that you put an asterisk at the end saying that by the time this document came out or was published, things have changed.
Yeah.
And that would make sense.
And maybe make a note of it wherever it might be mentioned throughout the document. So we should probably just do a word search on that and make note of that.
Yeah, I'll make a note of it. I'll talk to Jeff Palmer and get his take. I'll take a look at it first thing in the morning. And I'll contact you, let you guys know just the way it's structured and what might make the most sense. So there again, we just wanted to be clear for the reader.
I mean, it was cogent
Yeah.
back in June, but it's not anymore. So.
Okay. All right, so we'll take a look at that, and of course, the other changes that you sent over, take a look at those.
Thank you.
Thank you
Thank you
very
very
much.
much.
Thank you.
All right.
It was great working with your team again.
Yes, kind of getting back to normal here. All right, thank you very
Slowly
much.
but surely. Thank you, appreciate it.
All right.
That way you don't have to hang around here for the next half hour. No. No, it's going to be bad traffic anyways, so you might as well. Thank you.
All right, thank you so much.
So now we will move to the previous item number 4, which is review of disbursements. Lori?
Did either of you have any questions about September disbursements at all? I know that we review these when they're in the board package each month, and I've had, different members call about different things, so.
I didn't mark it, but there was, Steno bill was like $139,000. Is that possible to do that in a 1-month period?
It wasn't really for 1 month, it was over a period of time.
I was just going, wow, he put a
he's
lot of time in on that
A little delayed in
project.
getting us.
And
his
that
bills and
falls within the current agreement we have with him?
It does, yes.
Okay. That's the only one that I went, wow, that's a big one.
Yeah. And they're working-
Otherwise,
They're
everything-
working toward getting their permits and all of that. They're still working closely with us on that, so.
So there's Steno and, what's the other group?
KTUA, is
K2A is the park part
That's
of
the
it.
park.
Yeah.
The other engineering firm.
TLSR, TSLR.
Whatever
Yeah,
it is.
that.
So they're both working,
Yeah,
on it.
TSLR is more, I think they're working on more of the offsite, or the, CNO's more the building itself, and they're more for the offsite types of stuff that we're doing, that we have to do. The parking lot and the other types
who's
of
doing
things.
what?
The TSLR.
Steno's designing the building, right?
Yes, and working with the permitting and
And
all of that
he
stuff.
also does the permitting for the building?
Yeah,
The
he's-
engineering firm is
Doing, working.
parking lot
Yeah,
and
that, well, and the.
compaction
The
and
site, the site modifications. and
drainage,
Yeah, and grading and.
grading.
All of that, yeah.
Okay.
And that works actually very closely too with the K2A stuff, so, because there's kind of some offset there on that.
That was all I had, did you?
Yeah, no, I didn't. Nothing.
How far does that go to, 18?
Mm-hmm.
That goes through page 18, I guess, correct?
Yes. And then we have the revenue expense by fund. Summary of that. And the one that I like to look at is the consolidated one, because it has the percentages on it and stuff, so I'll kind of address that when we get there, okay?
Okay.
And then the balance sheet, which shows, like vehicle purchases and any big purchases that we've made, and changes to our CIP based on projects that we've got in progress and things of that nature. There's payments to our loan entities. So on page 24, we have the revenue expense consolidated summary. And so the revenue, operational revenue, you can see is down by 4.5%. And that's primarily water consumption sales is 11% lower than last year in spite of a 6% increase. And that's because the illegal farms were shut down. So that has impacted our water sales revenues. The reduction of water usage is of 14% between the first quarter last year and the first quarter of this year.
Well, that's not good for the bottom line, but it's good for the state
Yes, exactly.
mandates.
It is. Yes,
So
it
it's
is.
a
It
good and
is.
bad, right?
Yes, and we do have some offsets of some of the expenses aren't what they would have been if we'd been doing it at that level, but I'll get to that in a minute. And then the meter charges are slightly higher than budgeted, about $14,000 higher. The the revenues are $389,000 lower than what we would have expected them to be this point through the year. And the expenses are down, are slightly lower, about $178,000 lower. And part of that is, some of the operating costs that are associated with production. So, and some of them are just things that haven't hit yet this year either. So those things will level out through the year. The other revenue is $106,000 more than anticipated. And that has to do with mostly with the meter and installation and connection fees. And the other revenue, which is,
It's $5,000 more.
yeah. So, and then the non-operating expenses are a little skewed because we were talking about the fair market value thing that has to do with the interest and such. That's in the beginning of the year. So at the end of the year, we book that, and at the beginning of the year, we reverse it. Even though, we should probably change that, David, to make it for the end of the year, that reversal. Because it really skews the financial statement right now. That's at $268,000. And it will stay that way until year end when we book it again. So it kind of, it's it's the paper entries that we make that Chris was talking about during the process. So we're going to change that so that it doesn't reverse until year ends from last year. So it won't skew our financial statements throughout the year. Because it's just a paper entry anyway, but it makes it look weird. Makes it look like we have a revenue, a big revenue, when we don't.
Yeah.
So overall, we're 25% through the year, and we're about 22% of what we were expecting. So total income is $978,000 year to date, and then the budget was for year to date would have been $584,000. So we're in pretty good shape. But when you take out that $268,000, that changes that. So that's that. Did you have any questions about any of these items in particular?
No, I think we knew that water sales have been down.
Yeah.
Because in the packets, we get the statements, monthly statements, and it shows that it's down a little bit this year from previous year, but that was, the spike was, it's actually more in line with the previous years.
For example,
Um,
yes, it is.
yeah.
Yeah, the production is more in line with previous years.
Yeah.
But it's hard when we had that big spike because of a temporary situation.
Yeah, I was hoping that was the year that the state decided to use.
Right? Yeah, for example, in 21-22, we used, for the first quarter, we used 350,270,000 gallons of water. And this year we used 301,814 gallons of water. So it's a pretty big
50
difference.
million.
It's a 14% difference.
That's 150 acre feet.
Yeah. It's a big difference.
Yep.
So. And then the cash flows. We have a negative $50,000 year-to-date, which is typical. We just had some of our big payments for the loans are typically in July, so that kind of skews our cash flow for a little while.
But each year, if you look at it, each year we don't take out more loans, our debt decreases substantially, so.
It does.
Yeah.
And then we, of course, when we refinanced those 2 loans last year, that helped a lot too. And then the next report is on page 32, which is the monthly aging report. And that's about normal except for not compared to last year, but normal. Actually, not compared to the last 3 years because COVID was a little bit skewed as well. But this is a normal for our normal.
This is a normal, huh?
Yes. And that total is 898,000. Because we just had our three biggest water sales months. Our July, August, and September, so.
Yep.
And then we have the open payable report. And it shows what we hadn't paid, what we owed but hadn't paid as of September 30th. And then the project balance report, which shows some of the projects in process and where we're at with some of the expenditures on those. And next, we have the cash investment report, and that shows where our money's at.
Page number?
49.
Yeah, 'cause I'm not catching up.
And what kind of interest rate we're getting on it right now. So. It's not a lot, but we're looking at some other options. So, get the CDs are coming up right now. David's been looking into some of that, so we're probably gonna be transferring some of our money. We can put up to $5 million into CDs. And so we're probably gonna be doing that, because they're short-term
Wow,
CDs.
two-year CDs are almost 5%.
Yeah, we probably won't go out that far, but like 6 month is what, 3?
Or you can't go out 2 years?
Yeah, the chart I received after a year, it goes back down.
Yeah.
It goes up to 3% and it starts trending back down anything over a year. So
Yeah,
I'll
so-
have to look to see what you just mentioned right there. I'll have to look to see
Is
what's
it
happening.
government CD?
Yeah, they have to be.
It was 4.2-year, was higher than 10-year. Two-year was 4.5 something, and 10-year just got over 4%. Anyways,
Yeah, the ones we were looking at were 6 months, and, because they were 3.5, were they, David?
3.3 for 6 months, 3.5 for 12 months.
Yeah, so there's not much difference between that, and.
yeah,
we've got some-
and the 10-year was 4 point,
Yeah,
right
we've
at
got some
4.
potential expenditures coming up, so we're looking at laddering some of those. Over
That's what you do, you
several
ladder
months,
them.
yeah, so we're looking into that, and hopefully we'll, It's like, when do you jump on the merry-go-round, you know?
Yeah.
Because it's, you know, up and down, and, you know, next month is the shorter one's gonna be better, and the
Okay,
longer one's gonna be.
as long as inflation is up.
Yeah.
The Fed's not, at the worst, they would stop, but they're not going to decrease. So
Right.
as long as inflation numbers stay up like that, they'll either slow down but not decrease
Right.
at this point, so.
And worst case scenario, if something happens where we need the money, we can pull it out. We just lose a month's worth of interest rate on it, so it's not a very, there's very little risk.
Yeah, but for
involved.
2 year, I mean, or 1 year, that's,
Yeah, we'll have to see if, we have to review our investment policy and make sure that we're within that guideline.
yeah.
So it hasn't been very appealing up until now.
Now
I mean,
it's,
over the past several years, of the CD rates have been
gosh, I
absolutely
wish, yeah,
abysmal.
yeah, that's,
So now we're looking at being able to look at some other options, which would be nice.
yeah.
Then we have the solar project.
Yeah, looking a lot better.
Yeah, it does after that correction.
It actually may return something to the district before it dies.
Of course, the offset was we got charged more for the rates during that time, so.
Yeah.
But yes, this is what we were expecting it to be more like, for sure. And that's all I have. If you find something later, you can always call me, as you know, and I'll be happy to review it with you.
Okay, do you have any other
Nope.
questions about disbursements? All right, thank you. We did financials, right?
We just, yes,
We
did the
just did
finance.
solar, number 6. Number 7, we've already done. Number 8, committee comments. Do you have any
No.
questions or comments?
No, no additional questions or comments.
The only question I have is, do you want to bring this back to the November 2nd? Is it 2nd? Is that the next board meeting? Or the 16th for the full board review?
I would talk to Kim or Dawn to see what the,
You don't have a.
what's listed on there. I
Okay.
would prefer it to be if it's a not busy,
Yeah, I agree.
That's kind of what
Yeah.
I thought too,
Yeah.
because it tends to be a little lengthier, so.
yeah.
Okay, so we'll, either one, you don't have a preference,
No,
so we'll,
no.
all right, we'll look at that then.
Okay, well, some of my comments were how the financing division of the district is going to deal with the possibility of 8+% COLAs and
Yeah.
possibly, who knows, 12% increase in CalPERS costs and et cetera, et cetera.
Well, we just, we actually have a meeting with Habib, and we knew we were gonna have to do another rate review this year because, at the very least, because of, we knew we needed one for ourselves anyway, but we figured we were gonna be merging, so we budgeted for a rate review this year, a rate update. And, we need one desperately because everything has changed.
I know.
As you know.
You know
So-
what? We were really lucky as a district in 2008 when that crash hit because CalPERS raised their, I think it was like 15% or more. And we had just gotten into it and we weren't
Yes.
hit by it, but we're going to be hit by this one.
Yeah.
So,
Yeah, so we're gonna have to look at all of that. We're talking, Habib's gonna provide us with a quote that we'll be bringing to the board for approval to do another rate study for us. We don't really have a choice. We weren't gonna have a choice anyway because we were gonna have to do it in relation to if we merged with Sheep Creek, and that's not happening, but we still have to have a review, a rate review, because of all the things that have happened in the past year and all the things that are coming up.
well, that was my question. How is staff going to handle what's happening around us?
Yeah.
Because, I mean, we could be looking at least 8% inflation for
Again.
an extended period of time.
Yeah. So, yeah. So, and, you know, we can't look at having everything that we're dealing with go up 20% collectively over the years and not have an impact and we have to charge appropriate fees to cover our costs. And we're legally required to do that, so we're gonna have to do that rate review.
Okay.
So
That
that'll
was, that
be
was my
coming to the-
question, because
Yeah.
I can see it coming.
Yeah.
I knew inflation was coming, and it's here, and it's
And
not
we-
going to subside for a while.
And honestly, we may end up having to do rate, you know, we'll do another rate thing and another rate analysis and see what we can predict for the future, but depending on what happens, we may end up doing this every year.
So Social Security came out and it was 8 point something. The Social Security rise is gonna be this next year, in December, is 8.5 or something like that. So you have to assume that that's going to be in the area of the next June's, next budget's increases in
Aren't they
cost
like,
of
aren't they a
living.
year behind? They're kind of a year behind us, aren't they? Right now on that? Social Security,
Social Security does it for current.
because they didn't do an 8% last year, like,
No, it was like 4.
yeah, and so they're like a
And-
year behind on it.
Well, we're even further behind than they are.
I thought we were caught up as of January 1st last year.
No, we put in a supplementary 4% increase, but the actual increase won't come until July 1st of
It came.
next year, but we put it at, the board voted to increase by 4% because
Right.
we knew inflation was already here.
Right, and then the rest of that came July 1st of 2022, so we already covered that part. That was part of
No.
our budget last year.
No.
We got another 6%, July 1st.
We got a total.
Yeah, it was 4%, and then in November, we increased it, no,
In
November, we did 4%.
yeah.
And then July 1st, which is our normal time to do
We
that.
did another 4%.
We did 4.6%.
Okay, so we were
We were
caught
caught
up.
up as of
Okay.
that point, yes.
Okay.
As of
That-
January.
Well, kind of caught up, because we're always 6 months behind anyway,
Right,
because of the
right.
January 1st
Okay,
thing.
so that's good, but, okay. But it's going to be, that just means that another 8.6% is gonna be that much more.
And that's exactly, David was looking at those results, and that's exactly what we're looking at right now, is another,
We could
potential.
have a general manager of a 27-person CSD that makes more than the President of the United States pretty soon. Not saying anything there, but at
no comment.
8.5% clips,
Yeah,
yikes. Okay, well,
Yeah.
because that's gonna have to be calculated. I was wondering what you were gonna do. All right, so
Yes.
you're gonna review.
yeah, so we're talking about that, and I imagine it probably will come up over the next couple months, or, next month, right, David? Is that what?
Well, when we start the budget process
Yeah.
in December or whatever.
Yeah. So, but again, we're going into it way behind the 8 ball again, so. But,
I mean, the well went up over $100,000 because we were delayed on it 6 months, so.
and we're
But I
having-
see we bought the pipe already, that's good.
Yeah. And then, we'll be bringing forward some financing options for the building and, based on the cost estimate that we have and stuff, and for the board to make some decisions on and look at what our options are. So all of that's going to be coming up in the next couple of months. So we're finally getting some numbers and finally getting to where we need to be.
I know lumber went way up, then went down again.
It did, it went
so-
down, so that might.
So it's a little less.
We might be at a good window right now. Yeah, right now. It's like, hurry.
I don't
man.
know what
Let's run
about
out and buy
6
the
months
lumber.
from now, you
Yeah.
know? So, okay.
Yeah, and they're still having supply chain issues and, all of that. I mean, some of it's gotten better, but there's still, some of these issues that are facing the construction industry, so, as well as our industry.
Well, good, just as long as staff is looking at it.
Yes, we are.
Okay, that was the only comments I had, and nothing?
Nope.
Item 9 is review of action items prior meeting. Did we have anything?
We might have had one that I emailed you on, I think. Did we have one, Amy?
Yeah, there was verify the cost of land for well number 15.
Yes, and you did
was
send
being
it to
accounted
us.
for.
Yes.
And then current meeting?
No, there wasn't anything.
The only thing I had was when we were gonna schedule this to go to the board.
Mhm.
Yeah,
And it'll be either the 2nd or
Or
the
the
16th, depending on
What else is going
those
on.
two other agendas
Okay.
look like, yeah.
okay. And setting agenda for next meeting, I guess number 7 can be removed.
Back to
Anything
normal.
else?
Then we'll probably start talking about budgets.
Right.
Okay, well, that can probably fall under action items because it's going to be coming up.
Yeah.
Okay,
Our budget schedule, well, actually probably be addressed and we'll bring that to the board actually in December, so.
in December, yeah.
Yeah.
Okay, so we'll take item 7 out for now and then leave the rest. That
Goes right from audit back into
is
budget.
January
Right.
17th is the next meeting.
Yeah,
Okay,
that seems like a long way away, but.
It does.
October, November, December, yeah. All right, if that's it, we'll call the meeting adjourned at 5:40. Thank you.